Сейчас ты все узнаешь быстро. That's probably what option Greeks sound like to you. And if you're sounding and hearing Greek, I'm going to try to simplify the options delta for you in this video. I'm just going to make it real simple. We're not going to get into the jargon of the stock market just yet, but we will go on screen. I'll show you some examples, but to make things simple, let's go to the screen on paper and do some basic examples of the option delta. So if you wanted to know what option delta is all about, that's what we're going to cover. So let's take a look and dive deeper. If you're interested in learning more about the Greeks, feel free to watch some of the other videos that I have available. All right, so let's get started here on the option Greeks. If you're curious what language that was Russian. But let's look at the delta. Okay, what is delta? Delta is all of these Greeks, all they mean when we look at Greeks are the risks. That's all they mean. And you're really looking at a control center engages when you're looking at the risks. Hey, it's like, is it a little high? Is it this way? Is it that way? Is it straight up? Where are the risks? Okay, what's the problem? Well, you got different risks. You got price risk, you got time risk, and you got vega risk, right? So those are kind of your issues. If you have health problems, well, you have different risks. Well, you got maybe hereditary or let's say history risk. You have weight risk, maybe you have cholesterol risk. So there's different risks, right, in anything in life. And when it comes to options, you got price, time, vega. That's kind of the main ones. By the way, if you want to learn more about options, you probably should check out one of my courses, which some of them are 20 plus hours long, which means really detailed information. Just head on over to tradersfly.com, which will link you up to our courses website at Rise to Learn. So if you look at delta, all delta is telling you, delta just means price risk. Hey, is the stock going up or is it going down? That's all it means. Is it going down? That's all it tells you. And if we look at a price graph, or just if I share with you a graph, just a basic school picture, okay, this is the money you make. This is the price of the stock. So as the price of the stock goes up, are you going to make money or lose money, right? If this is $500 here, and this is $100 here, and the price of the stock is $150, and let's say over here is $200, well, if the stock goes from $150 to $200, are you making more money or are you making less money? Making more money. Going from $150 to $200, you're going to be here. You had $100, now you're going to be way up here. That's all it means, delta. You're going up, right? If I go this way, okay, like this, okay, again, let's say this is 500, this is 100, and price of the stock, again, same thing, price of the stock. And here we have 150, and this is 250 maybe over here. So let's say you got the stock around 200. Okay, now as the stock goes higher, are you making or losing money? You're losing money. If the stock goes down, okay, are you making money or losing money? You're making money, right? Don't worry about, if you're a buyer or seller. In this case, this is what it tells you. This is what delta is all about. Here, you're a short seller. How do I know? Well, because you're making money as prices go down, because your delta is negative. Here, you're making money as stock price goes up. Here, you're a normal buyer, kind of an investor. So that's really all delta does, and it tells you. So let's simplify this even further, and let me give you some kind of real examples. So let's say you got, here's some examples. Let's say you have a stock like Microsoft, and you have one share. Okay, so you got one share, and the stock price was at, doesn't really matter what it is right now, but let's say $180 a share, and you got it. All delta tells you is the amount you're going to make or lose per dollar. Okay, that's the important part. It's per dollar move in the stock. So if that stock, if you got it at 180, okay, and you got one share, well, if that stock goes to, let's do a quick chart here. If that stock goes, here you got 180, here's a price of 185. Well, you got 1 share. Well, are you making money or are you losing money? Well, you're making money. So it goes from 180 to 181. Okay, and you got 1 share. How much did you make? Right? You made $1. Okay, that's all it tells you. You made $1. And if you got 5 shares, okay, now you multiply this times 5, right? 180 to 181. How much did you make? Right? You made $5. Okay, 5 shares times a $1 move is 5 shares. So what's your delta? This is your delta. That's your delta. For every $1 move that stock made. So if you had a delta, let's look at it the other way, a delta of 3, that means you make $3 for every $1 move in the stock, which also means you have 3 shares. If you had 250, well, delta, or in other words this way, this is the sign, then you make 250 for every $1 move, okay, in the stock. Doesn't matter which stock, okay? Options, if you want to look at it in options, it's no different. What is the option worth or value? So let's look at it on the option side. You might say, hey, well, he's doing stocks. Well, options are no different. The only difference with options is that options have their own delta. So you got calls and you got puts. Certain options, here's your list of puts. Certain calls are going to be, let's say, 0.75 delta. Others might be 0.65 delta. Some might be 0.10 delta. You know, there's going to be different values there. Puts, they're usually going to be negative delta, right? So they're going to be negative delta because if you buy a put, you're getting, you're looking for stock price to go down. So these are negative delta. So this is negative delta. These are positive delta. So this might be like a negative, let's say 37 delta, okay? Negative 42 delta, negative 63 delta, okay? So these are negative, these are positive. That's the only difference. So if you go to the trading screen, let's look at it in a stock kind of fashion. And if I go ahead and just buy Netflix over here, okay, and I go ahead and buy 50 shares, well, here, what does it look like? Let's do 1 for now. Let's do 1 share. Well, here, as I move my mouse, well, if I got 1 share at 365, right now my profit and loss is at 0. Okay, if that 365 goes to 366, how much do I make? Come on, $1, right? So if I had, if it goes to, let's just, for second example, 367, $2, right? Because the delta right here is 1. Okay, gamma, theta are gone because, a stock on its own doesn't have those things. But the delta is 1. So no matter where you are, that slope, it's basically the slope of that line, which is price risk, because the price goes up or down, well, you make or lose money. Now, if I had 2 shares, let's go to 2 shares. Look at my delta, change to 2. Okay, so now all of a sudden, let's reset it back at 0. I bought the stock at 365. It goes up $1. The stock goes up $1. How much would I make? Delta 2. I get 2 shares. It goes from 365 to 366 with 2 shares. You're making $1 on the stock times 2 shares, right? You made $2. Okay. So I hope this makes sense for you. So you can ramp that up to 102. Well, you'd make $102. You could ramp it up to delta of, let's say, 329. Well, now you'd make $329 per every $1 move in the stock. Now, could you have a negative delta? Yeah, absolutely. So let's say all this does is tell you the slope. Well, let's say I go to the negative. Let's say I'm a short seller. Well, here in this way, it'd work the same way, but kind of opposite. Okay, now remember the bid-ask spread here is a little bit of an issue, so I'm starting at negative 200. So my delta here is negative 100. So let's say I go ahead and drop this to, where do I make money? Well, if it goes to the downside, then I make money. So here, 365 goes to, right now I'm down 200, to 363, well, I'm back at 0, right? Because I did $2 move with 100 delta. If I go the other way, I go ahead and lose money, right? If I go to 366, now I'm going to lose 297. If I go to 367, now I'm going to be down another $100, so almost $400. If I go to 368, because the stock's going up, and in this case, since we're short, I'm going to go ahead and lose another 100. So it works the same way if you're positive. If the stock's going down, right, you're losing money. So if it continues to go down, let's just make it live. If it goes down to, let's say, 360, take a moment, do the math. Went from 365 to 360 with 100 delta. What do you get? Boom, negative 500. So you're down $500 because 100 shares, that's your delta. Okay, these are linked. 100 shares, that's your delta, times the movement, which was 5. 5 times 100, okay, you get 500. All right, now when we look at options, it's a little more complicated because every option is worth a certain amount. You could go ahead and pool some of these things on the quotes and go to the delta. Now you can see them. So here you can see we have a delta almost of 1, like a stock. Otherwise, you have like a 0.54, 0.36, and if you look at the puts, you have the negative, as I mentioned. So all the puts are negative. So if I go ahead and let's say buy a single, and I go ahead, there you go. You can see that single right there. You got a delta of 43. So what does that mean? That means for every dollar move, I make $43 or lose $43. If it goes to the upside, because I'm positive, I make 43. If it goes down, I lose 43. Now, with options, one thing to keep in mind is that, remember, this has a curve, so that delta is going to change. So look, now it's 53, now it's 59. So that delta does change in option trading. With stocks, it's all the same because it's the amount of shares you have. With options, again, because with the time value and all these things, the volatility, it's all going to shift. But ultimately, the delta gives you a rough idea and perspective there of the price risk that you have at this exact time and moment on that option contract. So here I have a 46 delta. So if you say, hey, well, if I have a $5 movement in the stock, I could be in trouble. That's really the whole point of knowing and understanding the delta. Is that saying, hey, if that's a big number for you and a $5 move, let's say goes to 370, if 205 is a big win or a big loss, let's say here went down about to 350, you'd lose 646 because of course, the delta. And if you had more contracts, well, let's say you were trading like 6 contracts, well, all of a sudden that same loss, instead of 600, could be $3,900. So that's really a delta in a nutshell, and this does apply to spreads. So if I go into, let's say, an iron condor, and this one's a little more skewed, you could have a positive delta here. I could go ahead and skew it the other way. So give me a second here. So now I have more even of an iron condor, which gives me a little bit of a negative delta. So you can see here I have a negative 7.82 delta. Now, this is not the same exact thing as delta neutral strategies when you've heard of delta neutral strategies and concepts before, because when you're thinking or referencing delta neutral, you're taking delta into account with all these other Greeks, and more importantly here, the Vega. So as a simple form and an explanation, if you have a negative Vega, it's good to be a little short delta. How much depends on what you're trading, what you're doing, and the market conditions. But in other words, that makes it a little more neutral of a strategy. But I hope this gives you a little insight to delta. And ultimately, when you look at it, really, it's just, take a look at this sheet right here. It's really telling you the price risk. And if you're a buyer, you know, as prices go up, you're making money. That's what it's telling you. It's the shares that you have. If you're a short seller, as stock prices go down, you're making money. So with delta, your risk and what you're looking at is the price risk. Okay, with theta, you got time risk, Vega, volatility risk. Okay, here if we look at, it's a $1 move, or for every $1 move in the stock, that's the amount you make or lose. Okay, so if you had a delta of 3, you would make or lose $3. If you had a negative, well, it's the opposite, right? The graph is then you're looking at it as a short seller. So that's kind of what I wanted to share with you today, was delta, a little more insight, simplify it on paper like a kid does, because you know, people make it so much more complicated than it is. It's really just the price risk and looking at things, how much they move up or down, your profits, how much they move up and down relative to the stock price wiggling around. That's really all it is. Keep it simple. Don't make it more complicated than it has to be. Anyways, I hope this was helpful and insightful. And if it was, man, subscribe to the YouTube channel. Help me out, help you out. You'll continue to learn stuff. And if you really want to join me, definitely get on the newsletter list. That's where I release all the news for our books, courses, discounts, and other free training, including like some cool video courses that are free, like buying and building a trading computer, which if you haven't seen, check out our website at tradersfly.com. Anyways, thank you so much for joining me. And remember, do what you love, contribute to other people, but most importantly, live life abundantly. Hopefully, see you in the next video.